Hello. All right. Today we'll be looking at post-cooling measures, and because right after cooling measures is a normal tendency for people to wait and see, and you just wait lah, see how the market is reacting to the new cooling measures because there's a lot of uncertainties in the market. People don't know how other people will react to the new cooling measures. Is it going to be a severe one like the TDSR, or is it going to be not as severe? As we can see in the previous major round of cooling measure, which is back in 2018. And then in today's session, we'll be looking at whether this wait and see approach is typical in today's I wouldn't say buyers lah, and even sellers also, because they'll be thinking, hey, I may not want to sell now because I don't know, maybe buyers, they won't be as high a price, so maybe I'll wait and see whether my neighbors can sell a higher price or sell a low price. If you sell a low price, maybe I don't want to sell. So today we'll be looking at whether this will be the best approach for today's new cooling measures lah. And as usual, disclaimer, whatever I say does not represent any other people. They are or rather associated with me. So it's just purely my own point of view and research. Okay, so we take a look at the 2018 measures. I'm not going to dwell too much into it because I've done it in my previous video, the one just right before this, last week. And so I'm just comparing the two of them, 2018 and the 20201, which was done just 2 weeks back in 15 December. The key thing that I feel both of them are similar because they have increased the ABSD 5%, increased by about 5% or 10%, whichever it is, depending on what kind of category. And then the LTV was dropped from, loan to value ratio was dropped from 80% to 75%. On the other hand, for the new one, the main measure was the ABSD increase again. This one increased by 5%, increased by 10%, especially foreigner 10%. This we already talked about in the previous video, so I'm not going to continue talking about it. TDSR 60% to 55%. So this one dropped 5%. Remember the other one, loan to value ratio dropped 5%. I feel it is quite similar in terms of magnitude. I wouldn't say they are totally similar, because right down to the very detail, they are a little bit different lah. Although the amount that they tend to shift, they tend to shake the market. I feel actually, I personally feel this one is actually more painful. Okay. And why do I compare? Because I feel that they are quite similar in general overall. In terms of magnitude, in terms of impact on the market. So today we will see. One of the recent news that came out, I think just today is 29. So 4 days back, Shuntak withdrew from their en bloc attempt. In fact, they already agreed on the en bloc procedures, and they were supposed to proceed, but they withdraw because they were still under the option. That means they don't have to pay the full penalty, whichever. They just need to forfeit the tender deposit. So why did they forfeit this $500+ million deal? There are some reasons, but mostly I feel is a supply and demand thing. As we know in the previous video I've shared, there are a lot of supply, still a lot of supply in the CCR region. And high point being, they acquired this with the intention of developing it into another ultra high-end luxury condo, which is similar to Park Nova kind of feel, which was selling about 4,000 to 5,000 plus PSF around there. So I think that was their intention. But in today's market, right after the cooling measure, if they go ahead with this deal, plus the foreigner having to pay from 20% to 30% ABSD, which would have effectively reduced an even larger chunk of foreigner demand, which happened to be the main bulk of CCR buyers, CCR high-end luxury buyers. So if you remove the demand from these buyers and couple with the high supply, and then lower demand some more, what will happen to the price? And hence, I feel because of this, Shuntak realized that the risk is not very worth it. Okay, and hence they withdrew from it. And hence I understand why they will want to do it. But does it mean that the whole market is going to forfeit and stop and blocking? I think it really depends on the fundamentals of the specific region that the en bloc deal is located in. So we just because Shunta is withdrawing doesn't mean that other developers are not going to proceed, and it also depends on price. But today that's not going to be the focus. One thing we need to take a look at is today is the concern that buying close to cooling measures. People will think that after cooling measure, because government feel that this is a very high price already, so I cooling measure, so cooling measure is going to be like this, right? And people will think that if I buy it right close to cooling measure, that means I'm paying a very high price. If I buy it right after, that means price may crash. So that means either way I buy right before or after I will give. So therefore, it may not be a good time to buy near the supposedly peak price where cooling measures were introduced. But what we are going to share today, or rather what we are going to discuss today, is more of why it is not as simple as, cooling measures come in, and then this means that the whole market is peak price, and hence this is not a good time for me to make a move. Whether is it buyers, am I going to be buying at a high price, or sellers, am I going to be selling at a not so high price? And therefore I don't want to make a move. Everyone just wait and see. So just one example, this condo in Hillview, 1 month before the 2018 measures, I use 2018 measures because I feel like I said, I feel they are similar. The 2018 and 2021, they are similar, and hence I use this one to more or less predict that what's going to happen after a few 2 to 3 years down the road after this new round of cooling measures. And then let's see, 1 month before the 2018, why I say 1 month, because the measures were introduced on 5th July 2018. Okay, and then this is like just slightly over 1 month, then therefore it's still 1 month, which is quite close, because just now remember I said peak price just before, right after. So we try to look as close to the cooling measures part, because why the government threw in the cooling measure is because they feel that at this point, or maybe at that specific point when they threw in the cooling measure, they feel that it's too hot, the prices are too hot, the market is too hot. Okay. And then back to this, 30 May, this guy bought this unit, they are the same unit. We got this unit at 850K. And then 3 years later, just clear seller's stamp duty, 3 years later, sold off at a 45K loss. So does this mean that just before cooling measure, you see, maybe you were right? Peak price is here, then you buy just before this is a peak price, and hence what happened? You sell, you lose money. Is it really that case? So this guy lost money. On the other hand, this guy also bought 1 month before, quite close to the, because all these were before the cooling measure. Nobody knew that the cooling measure was coming, other than of course the government himself. So quite close. This guy, on the other hand, bought somewhere in the West Coast, bought this price, 1.981 million, and then sold it off in slightly over 3 years, almost about 3.5 years later, sold it off at this price. How much did they make? 400 plus K profit. ROI 102%, 102% in 3 years. How many of us have returns on that is able to hit this kind of rate in 3 years? Okay, how did I derive ROI? Because your profit divided by your down payment and your buyer stamp duty. Okay, because this one is it really depends on what they're buying. Okay, but of course, if you want to dive into specific numbers, we can dive in but that one I will usually do with the client usually now on a general basis. Too much time to share this. So anyway, 102%. Why this one I didn't calculate ROI? Because a loss is a loss already. What's there to ROI? There is negative ROI already. So we don't even talk about calculating a percentage. So this one, as you can see, why am I showing this? Because I'm trying to show that before the cooling measures and after the cooling measures, it does not mean that you buy right before the cooling measures, you won't make money. I think we can make money. It's just that it really depends on what you are buying. Are you buying the right thing to invest in, or are you buying the right thing to stay in so that you can stay and appreciate? The other one we are looking at, the other two examples we are looking at, after 2018, this one was July 2018 was the cooling measure. So 1 month after cooling measure, this one, this guy bought $1.138 million and then sold it off at $1 million in just slightly over 3 years. Clear the SSD and then sell it off for 138K loss. So you see, just after peak price, this guy made loss. Bought right after cooling measure, make loss. So does it mean that buy after cooling measure, sure lose money? That's why everyone wait and see, wait and see. On the other hand, this guy, October, just how many months? 3 months. 3 months after the cooling measures, bought 950K and then sold it off for $1.07 million to pocket a 120K profit for 46% ROI in 3 years. Okay, and what are we seeing over here? Like I said earlier, it doesn't mean that you buy before or right after you sure lose money. It's really a case of what are you buying before and after the cooling measures. That will be the one that determines whether you profit or not, the specific unit. Okay, and then the other one that we are looking at also, one more, this unit in Compassville, bought after I don't want to look at this one because this one is quite far before cooling measures. Anyway, this one was bought before cooling measures. This was bought after cooling measures, quite a few months after that, and then sold recently, 2021. Both, I think definitely they bought for investment because they exited very soon after the 3 year mark, 3 year SSD period. And then how much money did they make? Okay, well, these guys, if they wait for maybe 2-3 years to see already. Imagine they saw cooling measure 218. I feel for a few years for it for the dust to settle down. Then I make my move. If you were the one sitting on the fence waiting, what these guys who knew what they wanted, who knew what they were looking for, they got in at this price and then they exited 3 years later. Maybe some of us were sitting on the fence. This guy took the action and then really go and scrutinize what he wanted to buy, make the move, and then exited with a profit, even while we were still sitting on the fence. Okay, so will you be the one that is actively looking on the market, looking for the deals that you are specifically looking for? Whether you feel that there's a good bargain, it doesn't have to be development wise. It can be it's really more of price compared to what other people are paying, and then this one make money. 380K, I really don't think this is a small profit. I think this is a really very good profit in today's market. In case we're wondering whether this one is only replicable for resale units or new units, for those of you looking at new developments, it doesn't mean that, cooling measure come in, then developers are all gonna drop price. Like for example, Condo 8, this one, was launched just before the cooling measures launched already. Then the market, the prices came crashing after the cooling measures because the cooling measures came in Q3. 1,006 average dropped to about slightly over 1,005, 100 PSF. So you can see this is what investors wouldn't want to see, and then they were scared. And then guess what? Prices crashed after, and then here became the new low. After that, do you see any other quarters with the low? Were you be the one that is savvy enough to jump in while the tide is low enough? And then why would the developer drop the price so much? Partly because, let's take a look. July 2018, the cumulative take-up rate was 13.7%. That means 13.7% of the units were sold when the cooling measure struck. Okay, and then what happened, because the developer sold a very small minority of their units, and hence they maybe got a little bit cold feet, and hence they decided, in order for us to clear more sales, we better play safe so that we manage to hit our deadline before the 5-year deadline lah. And then guess what, they cut the price. But doesn't mean that every single developer will do the same thing. I think let's take a look at Condo B. They launched at the same quarter where the cooling measure struck, and then actually basically prices never look back, went up. Okay. In case you're wondering why I don't say the condo, because some things sensitive also. Let's say price crash, people make noise, that kind of thing. So I might as well just everything condo A, B, C. So cooling measures came in Q3 2018, but why didn't the prices came down? Like the first development condo A that we saw. July 2018 cumulative take-up rate was already 53%. So I feel if the developer is not in a rush, they still have time, they still have runway ahead to slowly sell their units, and they already hit more than 50%. There is no good reason why they need to really drop the prices to attract sales, because they are not in a rush. And hence this developer is able to hold and then gradually wait for the market sentiment to restore and then increase their prices again. And then condo C, we take a look. We zoom into here because this is 2018 Q2, 2018 Q3. Q3 came in, cooling measures came in. But on the other hand, prices actually went up. It went up another 2 quarters further instead of coming down, even though cooling measures were thrown in. Why is this though? Because of, you look at this, July 2018, the cumulative take-up rate was already 96%. At 96%, there is really no point for the developer to drop price and then be scared, because they have a lot of time to continue selling. So there is no reason why they need to drop the price to attract sales, because they do not need it. And hence, they have the ability to, instead of you see other people drop price, they actually increase the price further, because they know that they have no rush to sell the units, and they also know that maybe 1 or 2 more years the development is done already. It's going to attract higher price upon TOP. And hence, so it really depends on the take-up rate. If the take-up rate is very high, then there is really no reason why the developer will need to drop price even after cooling measures. Okay, so conclusion, doesn't mean that just buying, let's say within the next 2-3 months, 3-4 months after cooling measure, doesn't mean that it's a bad time to make a move. So based on what we have seen just now, it really depends on what you're looking for. How rational are you? Because I think in today's market, I've seen really a lot of irrational buyers who don't really know what they want, or maybe they do a little bit of research. They feel like some so-called gurus say that must buy freehold, must buy this one, must buy near MRT, must buy near good schools. Then they just follow that must buy. But I think the most important thing is we always look at the numbers. I've seen quite a lot of developments that are close to right in front of MRT, right in front of a good school, but don't make money. So does it mean that all these so-called common sayings are true? So at the end of the day, we have to make sure that we stick to the numbers approach. I feel, but personally, I'm a totally a numbers guy. I prefer not to be clouded by emotional aspects. And in fact, I don't even think that show flag finishings are even that important, because I've seen one existing launch, one existing new condo that is still selling. The finishings are terrible, but the prices have went up by, I think, one of the highest appreciation rate in the current launches, current batch of new launches. So therefore, we really need to know what we are looking for. And if you do not really know what you're looking for, what to look out for, then please do not hesitate to seek professional help. Of course, don't just go around and ask around. If you feel that the people that you talk to, you cannot trust, then go ahead and ask around a little bit more. Okay. And therefore, I think we are done here for today. This will be a shorter session as compared to the previous one, because we had to talk a little bit more on cooling measures. As always, if you need help for you to spot the good deals in the market. If you're looking for investment, then do not hesitate. Give me a call if you need to. Okay, that is all we have for today, and then see you guys. Bye bye.